We are covering these 5 top stocks with big percentage moves today. While watching bullish intraday price actions, let us inform you our review on DWTX. Dogwood Therapeutics Incorporated, formerly Virios Therapeutics Incorporated, continues advancing its clinical pipeline with significant developments across its 3 key assets. Halneuron, a non-opioid NaV1.7 inhibitor targeting neuropathic pain related to chemotherapy, has progressed to Phase 2B, reflecting the company's commitment to addressing unmet medical needs in pain management. The injectable formulation of tetrodotoxin remains a promising candidate, given its selective action on the peripheral nervous system, potentially offering a novel pain relief mechanism without opioid-related risks. In antiviral therapeutics, Dogwood Therapeutics maintains momentum with IMC-2, valacyclovir plus celecoxib, currently in Phase 2 development for long COVID. The combination therapy aims to suppress latent viral activity that may contribute to prolonged symptoms, positioning the company within an evolving and underserved market. Meanwhile, IMC-1, famciclovir plus celecoxib, remains Phase 3 ready as a treatment for FM, with fast-track designation from the FDA underscoring its potential clinical and commercial value. The proprietary fixed-dose combination therapy is designed to synergistically inhibit herpes virus replication, reinforcing Dogwood's strategy of leveraging antiviral mechanisms to treat chronic conditions. The company's ongoing progress reflects a strategic focus on high-impact therapeutic areas with significant unmet need. As the regulatory and clinical landscape continues to evolve, Dogwood's pipeline advancements could serve as key catalysts for investor consideration. Our review on KZIA. Kazia Therapeutics Limited continues to advance its oncology-focused pipeline, with key developments in its lead programs. Paxlovid, a brain-penetrant PI3K/ACT/mTOR inhibitor, remains central to the company's strategy as it progresses through clinical trials targeting multiple forms of brain cancer. Designed to inhibit PI3K, a key regulator of cell growth and division, Paxlovid is positioned to address the high unmet need in aggressive brain tumors. EVT-801, a VEGFR3 inhibitor, also remains a significant focus, given its role in blocking tumor-driven blood vessel and lymphatic growth, mechanisms essential for tumor progression and metastasis. The company continues to explore its potential across multiple cancer types, including renal and liver cancers, reinforcing its diversified approach to oncology drug development. With the regulatory landscape evolving and clinical data readouts expected, Kazia's developments may serve as important catalysts. The company's targeted approach to treating difficult-to-manage cancers reflects its commitment to innovation in oncology, positioning it as a potential player in the precision medicine space. Our review on WHLR. WHLR Real Estate Investment Trust Incorporated continues to strengthen its position as a fully integrated, self-managed commercial real estate investment company with a strategic emphasis on grocery-anchored retail centers. The company owns and operates a diverse portfolio comprising 79 properties, including 75 retail shopping centers totaling over 8.1 million leasable square feet, along with 4 undeveloped land parcels spanning approximately 61 acres. With a geographic footprint extending across 16 states, including South Carolina, Georgia, Virginia, Pennsylvania, North Carolina, and Florida, WHLR maintains a significant presence in key regional markets, benefiting from demographic trends, population growth, and sustained consumer demand for essential retail services. The company's business model is centered on leasing its properties to national and regional supermarket chains, as well as retailers that provide necessity-based and value-oriented goods and services. This approach has been fundamental in generating stable and recurring rental income, reducing exposure to economic volatility, and ensuring a steady stream of consumer traffic to its properties. Grocery-anchored centers have consistently demonstrated resilience in the face of economic fluctuations, as they serve as critical hubs for everyday essentials, maintaining strong demand even during downturns. WHLR's tenant mix is strategically curated to enhance long-term stability, leveraging anchor tenants that drive foot traffic while complementing smaller retailers within each property. Recent business developments highlight WHLR's ongoing efforts to optimize its property portfolio, improve operational efficiencies, and maximize asset value. The company remains focused on increasing occupancy rates, renegotiating leases to capture favorable terms, and strengthening tenant relationships to enhance long-term retention. Geographic diversification across multiple states provides an added layer of risk mitigation, allowing WHLR to maintain a stable revenue stream despite regional economic shifts. Additionally, the company continues to explore strategic growth opportunities, including the potential acquisition of new assets and the redevelopment of existing properties to enhance their value and appeal. As the retail real estate landscape evolves, WHLR is well-positioned to capitalize on emerging trends such as the increasing demand for convenience-based retail locations, mixed-use developments, and experiential shopping environments. The ongoing shift in consumer behavior towards essential goods and services further supports the company's strategy, reinforcing the value of its grocery-anchored portfolio. By maintaining a disciplined investment approach and focusing on high-quality, income-producing assets, WHLR remains committed to delivering long-term value for its investors. The company's proactive asset management, financial discipline, and strategic growth initiatives ensure it remains a key player in the grocery-anchored retail sector, poised for sustainable success in the commercial real estate market. Our review on WLDN. Willdan Group Incorporated is maintaining a strong growth trajectory, reporting impressive financial results for fiscal year 2024. Contract revenue increased 10.9% to $565.8 million, with net income nearly doubling to $22.6 million and adjusted EBITDA rising 24.2% to $56.8 million. Cash flow from operations surged 83.8% to $72.1 million, reflecting improved profitability, though the fourth quarter saw a slight decline in contract revenue and net income compared to the prior year. Looking forward, Willdan has set ambitious targets for 2025, projecting net revenue between $320 million and $330 million and adjusted EBITDA of $63 million to $67 million. The energy segment remains a key growth driver, with solutions in energy audits, demand-side management, and grid optimization. The company's ability to integrate cutting-edge technology into its service offerings gives it a competitive advantage in addressing the growing demand for sustainable and efficient energy solutions. The engineering and consulting segment continues to support infrastructure projects across municipalities and private sectors, further enhancing Willdan's diversified portfolio. Recent acquisitions bolster its capabilities in both energy efficiency and civil engineering, positioning it to capture emerging opportunities in sustainability and modernization. With a strong liquidity position and a disciplined approach to growth, Willdan is well-positioned to continue driving long-term value creation for investors. Our review on GV. Visionary Holdings Incorporated, a Canada-based private education provider, has recently expanded its business focus, securing an order for 12,000 new energy vehicles and unveiling plans to establish a network of battery swap service stations in Hong Kong. This development represents a significant shift toward diversification, combining the company's established education services with new ventures in the energy sector. Visionary Holdings operates a broad range of education-related businesses, including high school programs, vocational education, and online learning, alongside a real estate development arm and consulting services. With this latest move, the company is positioning itself as a player in the burgeoning green energy and electric vehicle (EV) sectors. The planned expansion into battery swap stations in Hong Kong reflects an understanding of the growing demand for EV infrastructure and sustainability initiatives, both of which align with global trends toward cleaner energy. This strategic shift could open up new revenue streams and boost the company's visibility in international markets, particularly in Asia, where the demand for EVs and related services is rapidly increasing. Visionary Holdings' core education business, which includes degree-oriented programs and vocational training, continues to provide a stable foundation for the company. It offers students comprehensive support through visa services, housing, job placement, and funding, ensuring a well-rounded educational experience. With the addition of the energy vehicle order and infrastructure plans, Visionary Holdings is setting the stage for future growth, balancing its traditional education offerings with an ambitious push into the EV market. The company's ability to capitalize on emerging sectors could potentially enhance its long-term prospects and expand its global footprint. Please subscribe, like, and check out more from the playlist. Thanks.